Welcome everyone to the Vested Interest channel. This is Shane back for our weekly portfolio update. I do this every Sunday, so if you are a dividend growth investor or an investor in general who just likes to check out other people's portfolios, go ahead and hit all those buttons down below. Make sure you subscribe to the channel. Hit that notification bell so you're notified whenever we put out any new content. If you like the videos, hit that thumbs up. Share with anyone you think that might find value in the content. And watch to the end. Watch time is one of the metrics that the YouTube algorithm looks at. We did add $660 in new capital, well, and some change as well. That's just a round number, makes it easy on the front end, but there is some change there as well. But around $660 to the portfolio. The portfolio is up this week, $462,765 and some change as well. All right, first up, options. We did have better luck this week in options after a couple weeks of not having anything hit. Lam Research, we had one covered call. We sold to open, so the -1 is one contract. One contract represents 100 shares, so that means we own at least 100 shares of Lam Research. So one covered call of Lam Research, ticker LRCX, out of the information technology sector with a strike price of $160, which means that if it hits $160 or above, we get the 160. We don't get anything above that, and then the shares would be called away. November 28th, which was Friday, was the expiration date on that, and we received 45 cents per share, which equals, after their fees, $44.47. So there's the 44.47. And this did expire out of the money. That means it did not hit $160. So we keep the options premium. We keep this $44.47, and we keep the 100 shares, and we'll look to run this again. We've been trying to run options on Lam Research for pretty much every week. This is the first one that's hit in a while, but 44.47 in options for this week. Now, dividends, on the other hand, nothing to report there. We didn't receive any dividends from any companies this week. Let me know if you received any dividends. It was a short week with Thanksgiving, so not a lot of companies were able to pay out anyway. But let me know if you received any dividends this week and who paid you. Now, first, new capital added on 11/24 here. You can see we added the full $660.84. We're going to talk about that. We missed our window for our typical weekly pickups, but we'll talk about that here in a second. But with this $660.84, we added 7 more shares to our VG Properties position, ticker VICI. This is a REIT out of the real estate sector. And if you haven't seen it yet, go check out my 2 stocks to buy in December. These are the 2 stocks that I'm going to be focused, or one of the 2 stocks that I'm going to be focused on here is VG Properties. We picked up those 7 shares at $28.69 per share. Added 1 more share to our Procter & Gamble position. Ticker PG is out of the consumer staple sector. Picked up that 1 share at $148.21. Excuse me. I've been adding to this one under 150. Still kind of hanging around that 150 or slightly under range. I believe it's a great add right now. I'll probably nibble on this one throughout the month of December when it's under 150 and continue to build that one out. We are over 100 shares, so not looking to add a ton, but wouldn't mind continuing to add right now while it's below my cost basis slightly. Owens Corning, ticker OC. This is out of the industrial sector. Picked up 3 shares there at $103.94. This one really rebounded here over the last week. I think it was up to 108, 111, 112 maybe by the end of the week. So glad I picked it up early in the week. Picked up those 3 shares at $103.94. And this $660.84. And the new shares picked up with that capital added $25.10 in passive income over the next calendar year. And this is what I was mentioning a little bit ago, a couple seconds ago here. On Friday, we missed the window. I jumped online at like 2:15 thinking we had a full day of trading and didn't realize that the market closed early on Friday. So for hopefully those of you out there who were investing on Friday, got in the market earlier than I did. I actually went out deer hunting again with my buddy. We sat most of the morning, and then by the time I drive home, where I hunt is about 2 hours away from my house. So by the time I drive home, it was already past the close of the market. So I was not able to add my typical weekly buys of VXUS and SCHD. I do have that capital in the portfolio right now, all queued up, ready to buy. So I will I will be buying on Monday morning those shares that I typically buy, as well as probably my new purchases for next week. So Monday and next week in general will be a little more than we've been investing recently, but it's just so I can catch up with what I missed last week. But total invested $660.84, $25.10 in passive income over the next calendar year. All right, a quick run through the sector weight update here. Communications makes up 8.17% of the portfolio. Consumer discretionary at 2.80. Consumer staples makes up 7.51% of the pie. Energy at 8.78%. Financials makes up 6.42%. Healthcare is in second place at 16.66%. Industrials makes up 5.59%. Technology, largest slice of the pie here at 18.79%. Materials at 2.61%. Utilities makes up 3.83% of the pie. REITs and real estate at 5.53 and ETFs at 13.33. Eventually, ETFs will take the overall portfolio as I add to those, or typically add to those every single week. As you heard, I missed adding to them on Friday this week because I got in a little late with the market closing a little early on Friday. All right, here's the portfolio sector weights, the percentages here that match up to the pie, as well as the dollar amount allocated to each sector as well. All right, here it is. I show this every single week. I think I say this every single week. I think it's important for those of us in this sector to show you that we are in the market with you. We're not just talking about investing. It is something that we do as well. At least I do. Every single week, I'm putting money into my portfolio, into the market, buying individual positions. The few ETFs that I have, typically, except for this week, I missed because the market was closed a little bit early. But I want you to see, those of you out there who follow along, to see a real portfolio built out over time, the ups and downs associated with having a portfolio, as well as individual positions and ETFs inside the portfolio, right? Each position, whether it's an ETF, index fund, master limited partnership, whether it's a REIT, whether it's a regular stock, they have a 52-week high, they have a 52-week low. Companies can hit that 52-week high and that 52-week low anytime throughout the year, sometimes multiple times. Owens Corning is a perfect example. This is one I was up at one point this year, 90% on this position. Now I am down 3.83%, and it is on my buy list again, trying to get this to 100 shares. So it happens with almost every single position that I hold. Google and Lam Research, no different. These were companies that I was adding to earlier in the year that have really shot up. So positions bounce around for a number of reasons. It might be positive or negative news. In the case of some energy stocks, it's the weather, right? If we have a weather event that shuts drilling off the coast or something, a lot of times that impacts energy. It could be weather events that have a major impact on construction. Maybe it slows down construction, and companies like Owens Corning are slow, or they're rebuilding from major storms or something like that, and it has them on the upswing. So it could be negative news that was pushed out, something around their earnings. They didn't hit earnings, or they made great earnings and drop anyway. There's a number of different, could be just a sentiment, right? Which is just how people feel. Feelings, nothing more than feelings, impact stocks as well. But anyways, each position in the position here, the ticker in this column, total shares that I hold, all of these numbers are actually as of the close of business on Friday whenever I got into the market. Current price, and tried to buy my weekly buys but couldn't. Current price here in this column, market value in this column, average cost per share, and my purchase price. This does include reinvested dividends. Total return, whether I'm up or down, you're going to see it. I'm not hiding anything here. I want those of you out there, again, watching the channel. Some of you might be newer investors. Some of you might be on the fence, even thinking about investing. You can do it. Hopefully this gives you the confidence and the understanding that, again, you're going to buy positions. They're going to go up. Some of them are going to go down. It is the nature of the market. Some of them are going to go down for just a small length of time and then bounce right back. Some of them are going to go down and stay down. Some of them are going to go up and then come back down. It is the nature of investing. You're going to have winners. You're going to have some losers. That happens to all of us. And hopefully, again, this gives some of you out there who may be on the fence or maybe are new investors, don't panic sell just because you see some red in the market. I'm not selling Comcast, even though I'm down 29%, right? I have been adding to this one. So if you've done your research, you understand how to do research, you understand how to look at the balance sheet, their income statements, do a discounted cash flow analysis, figure out how much a company is worth or what you think a company is worth, and then buy whenever it's in that range. If it drops lower, you should be willing to buy more, right? Don't panic sell just because you're seeing red. It happens. All right, total return here, percent return, whether I'm up or down. And let's talk about this one real quick. Biggest loser is Comcast. Biggest winner, Lam Research, 113%, followed by Google at 103%. But one of the biggest winners is Omega Healthcare Investors, up 55%. I mean, look at that. That's a REIT out of the real estate sector that is also an income play, right? So I know some people talk about being growth investors. I know some people talk about being dividend growth investors or dividend investors, income investors. I think there's a misnomenclature on that. I think you can be both, right? I'm certainly investing for growth. I want my positions to grow, right? I didn't buy Google hoping that it would stay where it was at. It's obviously grown. I didn't buy Lam Research hoping it would stay where it's at. It's obviously grown. Omega Healthcare investors would probably be considered a income play with a yield on cost that I locked in at 9.057%, but it's grown up 55.19%, right? So I want both growth and income. I don't want to eventually have to sell my positions to get one or the other, right? Now, sector that the positions fall in this column, whether they're a quarterly, monthly, semi-annual payer, am considering getting rid of this monthly column here. I did have a couple monthly payers there. Main Street Capital I owned a few years ago. Realty Income I sold, I think, earlier this year. So they were both monthly payers. That's why I had this column. Right now, it doesn't make sense to have it. Maybe I'll get rid of it. Semi-annual is just the one position that I hold pays semi-annually, and that's Valet. Current yield in this column, my yield on cost here. Portfolio weighting, I do have a rule in the portfolio. Excuse me, I don't want any one position to be more than 10%. I do not want any one sector to be more than 20 to 25%. Google is getting close at 9.58, as is Lam Research at 9.21. Just because, or if they do go over 10% of the portfolio, that does not mean I am going to be selling them. That means I wouldn't add to those positions. I haven't been adding to these two anyway, so it may be a moot point. But if they go over 10%, again, it doesn't mean I'm going to be selling out of them. I'm going to let them run. It just means that I won't be adding any more to them. I'll look to add elsewhere, and eventually the portfolio will level out that way. Estimated annual income in this column. Dividend growth year over year. This does get adjusted as the companies adjust their dividends year over year. Payout months here, typical months that the companies pay out in, 15% of a 52-week low. Let's talk about this. I've mentioned it before, but I want this column, I want my average cost per share to be below where a company sits at 15% of a 52-week low. So for example, Comcast, it's much lower than 15% of a 52-week low right now, but my average cost per share at $37.75 is above the $35.68. That would put me in that range. So maybe I add to that one until I get below that. I won't be adding a ton. Again, $15,420.27 right now in this position. I am down $4,500, a little over that. So I have been adding to this one, trying to bring down my cost basis, but I'm not going to, much more than $18,000 invested in this. Probably about as high as I want to go on that one. All right. Total shares, 7,195.768 shares. Market value of the portfolio, $462,755.54. We are up quite a bit from last week. Purchase price, this does include reinvested dividends. I do have $375,785.09 into the portfolio. Total return, I am up $86,970.45. And again, I know some people only focus on total return. It's nice to see, but unless I sell all of these positions, I do not lock in this total return. I do not want to sell all of these positions, so does this really matter? Again, some people only focus on that. It's not my main focus. Percent return, I am up 23.14%. Again, nice to see, but unless I sell all of these positions, I don't lock this in. Which sector the companies fall in, I think I mentioned that. Portfolio salary per month, $1,119.71 currently. Per week, $258.39 per week. Per day, $36.81. And per hour, if this was working a part-time job, which it kind of is, $1.53 per hour, every hour, no breaks, including weekends and holidays. The portfolio is generating $1.53 per hour. Current yield of the portfolio, 2.904%. My yield on cost is 3.576%. Portfolio weighting is 100% because it counts for all the positions. And estimated annual income, this is what I'm focused on. That's why it's circled over here in red. All of the dividend income paid out from all of the positions in the portfolio, and it continues to grow week over week, month over month, quarter over quarter, year over year as I add new capital. As the positions in the portfolio pay out dividends, as those dividends get reinvested, and as the company raises their dividends over time, which is what we want to see. And it currently sits at $13,436.52. As I mentioned, I'd like to get to $14,000 by the end of the year. It's going to be very close. I think we're going to be slightly, just ever so slightly under that, but it is going to be close. Dividend growth year over year currently at 5.33%. Again, that will be adjusted as the companies in the portfolio adjust their dividends as well. And that is really it for this update. Again, I did miss my purchases on Friday, but we'll get back into the market on Monday morning and do our typical buys that we do to start the week, and we will catch up on our ETF buys that we missed on Friday. So Monday will Monday will be a little heavier investing day than I typically have to start out the week, but we're going to catch up from missing out on Friday and get those ETFs caught up, and then we'll have a double dip in ETFs next week that we will cover. So don't forget to hit all those buttons on the way out the door. Hopefully you had a great holiday weekend, got to spend some time with family and friends. Happy Thanksgiving, even though it is over. Again, hope you all had a very happy and safe Thanksgiving. Don't forget to hit all those buttons on the way out the door. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you bought this week. Hopefully you didn't miss investing this week like I did on Friday. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week coming up, and we will see you in the next one. Already in December. Can you believe that? I'm not a financial advisor. Nothing in this presentation should be considered financial advice. So I'm only sharing my opinion. Invest journey for educational and entertainment purposes. Investing involves risk. You can't lose money, so never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.